Good morning, everyone, and welcome to our roundtable on SBIC funds. We've looked forward to this morning now for weeks as we set the agenda for this year, and I thank all of you. And I understand there were some travel situations with fog or weather, and I think we're missing one or two of our invitees, but I welcome you to this roundtable. And the difference, of course, is that it's not as formal as a hearing. We really want there to be a good bit of exchange over the next, hour and a half, potentially 2 hours of this hearing, and I really thank you all for making yourselves available. I apologize for being a few minutes late. I had to add a meeting to my schedule this morning that we did not anticipate, and it just went a little bit longer. I'm going to begin with just an opening, a short opening statement to kind of set the tone for the hearing. And then we'll go through some instructions about how this roundtable usually works. We've had over a dozen of these since I've been chair. We find them to be extremely helpful in really understanding how programs work or how they don't work or what we can do to improve them. And it's all about this committee's effort to be as helpful and supportive to entrepreneurs in our country as possible in a full range of ways, particularly giving them access to capital, which is the purpose of the SBICs. So let me just again thank you for joining us this morning. We will explore opportunities and policy options to build, thank you, on the success of SBI programs and increasing access to capital for small businesses and entrepreneurs. We have assembled here today experts representing investors, small business investment companies, small business owners, officials from the Department of Treasury, and the SBA. Today's discussion is the second in a series of 3 roundtables that we're holding to discuss startups and high-growth entrepreneurship. Our next roundtable on entrepreneur ecosystems will be April 18th. We're bringing together a wide variety of experts, academics, policy experts, state and local leaders who are leading the way in creating stronger entrepreneurial ecosystems in their cities, in their regions, and in our country. Ultimately, through these discussions, we will identify specific ideas and recommendations to be included in a comprehensive piece of legislation that we hope to move through Congress and that the President can sign. As you all are well aware, the Investment Company Act of 1958, or maybe you're not aware of this, was actually signed into law by President Eisenhower, established the Small Business Investment Company Program. Not only was the bill signed by President Eisenhower, it was co-sponsored by a very illustrious group of senators, including Lyndon Baines Johnson and Senator William Fulbright. It was also the subject of a hearing in 1958 by the Senate Banking Committee's Subcommittee on Small Business. During the hearing, the subcommittee chairman, Joseph S. Clark, said the legislation is, quote, necessary to increase the availability of long-term credit and equity capital for small businesses. He also said that the committee that approved the bill has pretty nearly the entire spectrum of opinion throughout the country with respect to the need for federal assistance. Under SBIC program, the SBA licenses, regulates, and helps provide funds for privately owned and operated venture capital investment firms. SBICs are licensed and regulated by the SBA. They use their own private money plus money borrowed with an SBA guarantee. Typically, they will borrow $2 for every $1 of private capital. Since 1958, SBICs have invested $76 billion to over 100,000 small businesses. We've funded Apple, FedEx, Callaway Golf, Jenny Craig, and Outback Steakhouse, to name just a few. I want to mention 2 very successful SBICs that are joining us here today. One is Main Street Capital, Houston, Texas. Will you all raise your hand? There you go. Recent small business, they received the SBIC of the Year in 2010. Recent small business investments, Gulf Manufacturing in Humble, Texas, industrial manufacturing company distributing across the country, Main Street Capital has invested over $500 million in more than 90 small businesses. Their companies employ more than 12,000 employees. So we're very interested in hearing more from you all today. We appreciate you all coming. Gemini Investors, where are you guys? Right next to them. Great. You all were the SBIC of the Year in 2009. Center Rock, Berlin, Pennsylvania. Specifically, you're very famous for the company designing the drill bit that saved the Chilean miners. And the President recognized that in his State of the Union, I believe, last year. And we're very grateful for you all being present today. Last month, Ranking Member Snow and I introduced a bill to make, we think, improvements and modifications to this program. Our bill raises the statutory cap, as the President has recommended, from $3 billion to $4 billion. The cap was last increased in 2003. It's time to raise it. It also increases the amount of leverage by SBIC licensees under common control from $225 to $350, called the Family of Funds. These provisions were also included in the President's original Startup America. Unfortunately, they were dropped by the House when they passed the deregulation bill, which they sent over to us, which we're debating on the floor today. It's not turned, in my view, it's a deregulation bill, not a capital bill, and one of the most significant provisions was dropped by the House, and we're going to try to see what we can do to recover it. For the past week, the Senate has been debating this bill called the Jobs Bill, which is really a deregulation bill. It extends new opportunities, but also some concerns about companies going directly to the Internet and borrowing the capital they need or soliciting investors through the Internet, called crowdfunding, which is a very exciting but potentially dangerous enterprise without the right safeguards, and that debate's happening on the Senate floor actually as I speak. I've made it clear myself there were several problems with the bill that came over to the House. I won't go into them all right now because that's not the subject of this committee. But needless to say, I believe that SBICs have been an important component of the work of the SBA, of the work of our federal government. I'd like to see if there's any reasons why it actually can't be expanded beyond the $4 billion authorization. I'm not sure there's any rhyme or reason why we've been at that level for all these years. I'd be very interested in any of your feelings about that. I also want to say that as chair of this committee, I am really, really focused on the quality of our programming as opposed to the quantity of our programming. And I'm very interested to find out who is responsible for evaluating the SBICs and how we eliminate the low-performing, ineffective SBICs and how we strengthen the stronger ones, and et cetera, et cetera. I have a lot of other questions. So that's my opening. I want to recognize David Gillers on my staff and Kevin Wheeler, who are the two seniors, and on the Snow Committee, if you would.
And Yelena McWilliams, I spoke with some of you, and Matt as well. Thank you for coming.
So we're going to start, Barry, with you, and if you could just introduce yourself briefly and give like just a 1-minute little glimpse as to why you're here and what your role is. I know that we've familiarized ourselves generally with who you are, and then we'll just begin by opening up really with questions. And when you want to speak, you can just put your name card up like this. That way I'll know to recognize you, and we'll just try to go around and kind of keep it as open and as flexible. And if I'm not asking the right questions, please feel free to ask them yourself, starting with Barry. And you've got to press your talk button. You just press the button and it'll light up, and you have to sort of speak right into your microphone.
Okay. Good morning, Madam Chair, and thanks for the invitation. My name is Barry Whitus, and I'm the Deputy Comptroller for Community Affairs at the Office of the Comptroller of the Currency. We're the federal agency within the Department of Treasury that supervises national banks and federal thrifts. Our role within Community Affairs is to encourage national bank and federal thrift investments in small business finance. We've recently been involved in outreach to banks across the country to make them aware of the opportunities to invest in small business finance through the SBIC program. We've been holding seminars and national teleconference on this subject and making them aware of the fact that they can earn Community Reinvestment Act credit for investing in SBICs. We'll be putting out a paper soon that is a sort of a how-to guide for investing in SBICs. We're working very closely with Harry Haskins at the SBA as well as Carl Kopfinger, who's one of the national banks that we supervise, to make sure that we make this understandable and help banks understand that there are ways to invest safely and earn a good return in SBICs.
Thank you. Rick?
Thank you for inviting me. My name is Rick Gerard. My brother and I own Gerard Environmental Services out of Orlando, Florida. We're a commercial landscaping company. Last year revenue was around $20 million, and currently we're ranked number 57 in the country as far as landscaping companies go. We're one of the largest family-owned companies in Central Florida. We're one of the largest, probably one of the top 5 largest landscaping companies in the state of Florida. So we're a big, small company.
And you got your funding through one of the SBICs?
Yes, ma'am. The SBIC played a very extremely important role in my company, because in 2008 and 2009, 10, our company actually grew. I opened 5 offices in Florida in 2009, 2010, as we were entering into the recession. I added 100 jobs throughout the state, and a lot of people, didn't necessarily agree with my method, but that's what entrepreneurs do. Entrepreneurs take risk, and looking back, there's not really much I would change. But the SBIC played an extremely important role where the banks wouldn't, and so the SBIC played a very important role.
Wonderful. Thank you, Rick. Please.
Good morning. Thanks for having me here. I'm Teese Kern. I'm with Avon Equity Partners. We're in Cedar Rapids, Iowa. My partners and I have been running private equity funds there based in Cedar Rapids for actually, one of my partners started with a fund that started in 1959, so we've been with the SBIC program since the beginning. We have run multiple SBICs as well as non-SBICs, and have been with the program for a long time.
Thank you. Your insights will be very helpful. We appreciate you being here. Carl?
Yes, good morning, Senator, and thank you for inviting me to participate today. I'm Carl Kopfinger. I'm a Senior Vice President with TD Bank. I'm based in Philadelphia, Pennsylvania. I head up our investing in SBICs. We have more than 60 SBICs under management right now, and we continue to invest during the downturn, and so we like the program very much.
Thank you. Dan?
Good morning. I'm Dan Pemberthy. I'm the CFO and Executive Vice President of Rand Capital Corporation. I'm here to tell you all what you can do with just $15 million. Rand is a BDC. We are publicly traded since 1971. We're a founding member of NASDAQ, and we also own a wholly owned subsidiary, Rand SBIC. I'm also the current president of the Upstate Venture Association of New York. We operate in Buffalo, New York, an underserved and economically depressed part of New York State. During the past 10 years, we've taken our $15 million. We've invested in 30 portfolio companies via 83 separate financing transactions. These 30 companies now represent over 1,711 jobs. We have increased job growth by over 500 jobs over the past 10 years. We've also increased total revenues in these same companies by over $200 million. We have had an impact through the SBIC program. Some of our companies include Mid-America Brick, an abandoned plant in the economically depressed town of Senator Kit Bonds, which is now the leading producer of bricks in Missouri. Synacor, founded by an internet startup founded by a student at the University of Buffalo, has increased their employment by 15 times and their revenues by 60 times since our investment in 2002. They completed an IPO just 30 days ago. Gemcor builds machinery in Buffalo that puts rivets into airplanes. Gemcor has doubled its employment, doubled its revenues, and it's shipping its aircraft machinery worldwide. Every Boeing airplane ever made in flight and in flight has been touched by a Gemcor machine.
Okay, and save all the rest of the testimony. This is just a brief introduction. Harry?
Good morning, and thank you, Chair Andrew, for having me here. We appreciate your leadership on issues involving the SBIC program. We've worked closely with your staff, and they have been tremendous. The program has enjoyed a lot of success and positive momentum over the past couple of years. We've reduced processing time significantly across the board and essentially doubling our productivity. We are building upon the success of the SBIC platform to expand access to capital in the more underserved markets via our Impact Fund initiative in our early stage.
Okay, and just hold just a minute, because these are just introductions. We're going to get back to you for your opening. Go ahead, Roger.
Good morning. Thank you. My name is Roger Bates. I am a partner at Mangrove Equity Partners in Tampa, Florida, and for the last 3 years I've been serving as the president of one of our portfolio companies, MEP R&H Supply, which is headquartered in Broussard, Louisiana.
Oh, wonderful. Thank you. Vincent.
Hi. Thank you, Senator, for holding this event. Honored to be here today. I'm Vince Foster, CEO of Main Street Capital. We operate out of a single location in Houston, Texas. We're publicly traded on the New York Stock Exchange. We first entered the program 10 years ago in 2002 with a single license. We received a second license in 2006, began to outgrow the program, and converted to a publicly traded BDC in order to stay in the program and continue to grow. So I'm interested in how we can keep better players in the program.
Great. James.
I'm Jim Goodman from Gemini Investors in Wellesley, Mass., and thank you for allowing me to be here and speak. We are currently investing our 5th SBIC fund. We entered the program in 1995. We've invested in 93 companies since that point, and we've put a little under $400 million to work. In the last 8 years, our companies have created almost 10,000 jobs and also created a number of small businesses themselves, in particular our franchising companies. So I would like to be able to talk about all those things today.
Manuel.
Good morning, Madam Chair. Thank you for having me participate in this committee and for letting me provide some overview on the benefits of the SBIC program. Similar to Main Street Capital, when I started Hercules, I looked at the SBIC program as an integral part of launching Hercules and getting capital and getting access. I'm one of the unique players on this panel who invest almost exclusively in the venture industry and work with pre-revenue companies that are significant job creators and innovators of American job and technology in this country. I am proud to say under the SBIC program we have 2 licensees. We have over $225 million under the SBA program, and we've now been able to use that capital to invest in $750 million in 95 technology and life sciences companies since the founding of Hercules. And I'm very proud and very strong supporter of the SBIC program that made a difference in our company when we started. So thank you for having us here.
Tim.
Yes, good morning. My name is Tim Rafalovich, and I manage the alternative assets for Wells Fargo, which includes our SBIC investments. Carl and I have the unique kind of privilege of being able to be speaking from the investment standpoint. We invest in SBICs. SBICs then have general managers, many of which are here today, who invest then in the companies, of which 2 are here. So if the program wants to be expanded, it needs to take place top-down, which is through the investors and their incentives to invest in SBICs. I have all sorts of statistics on companies that we've invested in and how they have grown that we can maybe talk about in the future. One that went from 63 employees to 1,167 just in a short amount of period of time. But one of the things I want to make clear as well is a lot of people might think, because Wells Fargo is the largest lender on the small business end of things, having deployed about $14 billion in capital last year, that there might be a little bit of a conflict of interest here. We don't believe that there is a conflict at all. This is a win-win, because many of the SBIC investments made are investments that would have never been made by a major bank. And so what happens is that the banks then won't fund these smaller companies because there's a little bit too much risk. SBICs do, but then Wells Fargo can come in a little later and be able to refinance these. It's a good win-win. That's why we believe in this program.
Nicely put. Charles?
Good morning, and thank you for including me as well. I'm Charlie Rothstein, founder of Berengia, which is Michigan's largest venture capital firm. We're also managers of the Michigan Growth Capital Partners funds, one of which is an SBIC. It's our second SBIC, so we too have had a long relationship with the Small Business Administration. The current SBIC was licensed last year as part of the Impact Investment Initiative, and it totals $130 million.
Thank you so much. Let's start with Harry, if we could, and go ahead, Harry, and you manage this program through the Small Business Administration, and if you would just, I think everyone here is familiar, but for those that are viewing and watching and will be reading the outcome, why don't you go ahead and give us your opening comments, and then we'll open it up for general questions.
Thank you. And rather than repeating some of what I said, I'll just continue on. We want to build upon the success of the SBIC platform.
And can you speak more closely into your mic? It's a little awkward, but you have to lean forward.
We want to build upon the success of the SBIC platform, and we've expanded it to include a couple of new initiatives, the Impact Fund Initiative and the Early Stage Initiative. However, we believe increasing the authorization level on the family of funds limit will have a positive impact on the availability of capital for small businesses and can be managed with minimal risk and no cost to the taxpayer. We look forward to continuing our work with the committee to build upon the success of the program and to contribute to a positive economic climate for small businesses.
And explain how it's minimum risk from your vantage point and no cost to the taxpayer.
Well, the program currently operates under a zero subsidy concept where the fees associated with the program cover the costs associated with
And has
the
it been that way since its inception?
No, up until around 2000, I believe, we actually worked under appropriated funds where we actually had to receive an appropriation, and the amount of money we could guarantee was limited by that appropriation. But the success of the program and more importantly, the success of the SBIC has enabled us to move to a zero subsidy basis.
Well, let me ask you this. Why do you think then the President only recommended extending it from $3 billion to $4 billion? I mean, if it's low risk and no cost to the taxpayer, why can't we go up higher than that?
Well, our current authorization level has been sufficient to support the growth of the program. Historically, up to around 2009, we averaged about $700 million in authorization. We doubled that in 2010 and then increased it again in 2011 to about $1.8 billion. So we think the existing authorization was sufficient. The increase to 4 should give us sufficient capacity over the next few years to support the growth of the program. Obviously, it's worth revisiting if growth continues at its current pace to see if it needs to be raised beyond that.
Okay, I'd like to talk about that later on. Let me begin with some questions. Why do we need SBICs in the spectrum of venture capital? And if some of you, I know this is a simple question, but if one of you would just take it and explain why this is important, because I think there's a lot of confusion out there about venture capital and when they come in and when they don't come in and where there's a need for them. So, Vincent, we'll start with you, and then I'll go to Manuel.
Thank you. I think the reason we really need SBICs is pretty simple, and that is to continue on an earlier point that was made. The best way to think about SBICs is they begin where the banks end, and they end when private equity or regular institutional venture capital funds begin. There's a huge void in between someone that's commercially bankable as a small business and someone that is private equity or venture capital eligible, and that's really the gap that we fill. Another way to think about it is we provide cash flow-based financing and cash flow-based capital, equity capital, debt capital to small businesses, which is literally not available. Commercial banks will routinely, for larger companies, loan a multiple of their cash flow in financing, and that's how they operate. Small businesses have to borrow against their assets, their inventory, and guarantee it.
It's very difficult, including their house,
right,
their life insurance,
everything,
and their pension funds, and their children's college education. And this chairman has had about enough of that.
And the nice thing about the SBIC program, even more than the 504 or 7A, is personal guarantees aren't required, and they're virtually unknown as far as my experience.
And I just want to stress this point because the smarter I get on it, and I've got a long way to go, but this country can never unleash the potential of people who have little financial strength but great character and extraordinary intelligence and a tremendous amount of nerve if we do not find a way around the fact that you can't get capital from anybody unless you already have wealth. Do we understand the problem here? And so that is why I'm going to just stay on this. That's why this is very interesting to me. I've had business owner after business owner, contrary to what the Chamber of Commerce says. There are many, many, many businesses out there, like this business right here, Rick, who can grow, who can show how they can grow, but they don't want to pledge their house, and maybe you have, or your home or your children's future to go to a bank. Banks are only lending under certain circumstances. If we don't open up other opportunities like this, I don't know how we grow ourselves out of this recession that we're in or really tap the strength of America. So I really appreciate, Vincent, you saying that. Manuel, do you have anything else you want to add?
You know, Madam Chair, I could speak to you as a firsthand experience as an entrepreneur, and not to bring up my heritage as a minority. When I started company Hercules, I could not get bank financing. I could not get any bank to give me capital. I basically risked everything I had and approached the SBIC as a lender of choice to be, frankly, the foundation of the capital that we had to go out and fund and invest in entrepreneur innovative companies that have gone on to create hundreds and hundreds of jobs, if not thousands of jobs, in California, in Massachusetts, and in various regions of the Southeast. So unlike most gentlemen on this panel here, we invest in companies that don't have revenues. We invest in companies that cannot get any bank financing. And if it weren't for the SBA program, the SBIC program that we rely upon as a source of financing, a lot of this American innovation they refer to and a lot of these dreams companies would never, ever come to fruition. And I am proud to say that through our organization, we have well-known names that have received capital through us, such as Annie's Foods, the simple bunny rabbit company that you go in, Whole Foods, and you do that. That is a company that we backed. I'm proud to say we have another company in the drug discovery area that focuses on improving the quality of life of cancer victims. And they are making new biologics for cancer drugs, which we all know from the FDA process are very scarce and hard to get a hold of. We have companies in our portfolio that are dedicated to clean energy, as Bright Source Technology, for example, that does solar panels and create new ways of generating energy in the market. And then we have social media companies, high-profile names such as Box.net, which is cloud computing, which is growing exponentially in number of employees that they're hiring and creating jobs. So the SBIC program is an integral part of our capital structure and a program that I would like to see, to your point, expanded beyond the $4 billion that's out there. And frankly, I would love to be able to see even to go beyond the $350 million, because I can tell you, Madam Chair, that we can put that money to work and we can put that money to create jobs in this country for many, many more great ideas that entrepreneurs have, like Rick and others out there.
Thank you. Charlie?
Well, sure. I was just going to add that, onto the last couple of comments that.
Do you have to press your button? I'm sorry.
That's okay. I was just going to add to the
very
last.
complicated for
no,
you,
it's
very
not.
smart folks.
It really isn't that complicated. But I was just going to add on to the last couple of comments that we're clearly talking about debt financing, and debt works for companies that have predictable cash flow. But there really is also a shortage of pure equity capital. The venture capital industry has shrunken by some 40% over the last handful of years, and entrepreneurs are starved for that kind of capital as well. I mean, equity, unlike debt, equity, it allows companies to kind of take greater risks than does debt, because there really isn't any ticking time bomb to it. It doesn't need to be repaid immediately. It allows a company to be a bit more long-term in the way that it thinks toward R&D and even the introduction of new products. So that is something that we should work to address. The institutional market that used to support venture capital firms that were out raising funds is decreasing. Those institutions are looking elsewhere. They're backing buyout funds and other types of alternative investment vehicles. So either, maybe within SBA or maybe outside of SBA, we can come up with new solutions.
And Charlie, do you know why that is shrinking? Is it just the nature of the recession or the
Well, I
Does
think
anybody have an idea about why the venture capital is shrinking? Because I know that that's why this bill flew over from the House, because there's a real need, but I'm not sure we're correcting it the right way. This crowdfunding idea is in a response, I think, if I'm reading this correctly, to use the internet in a way that was not legal to raise venture capital funds for businesses, which sounds great and is it could be game-changing. The problem is, if you don't have the right safeguards and regulations, it could also, in my view, open up a whole pathway of fraud that we haven't even begun to even think about. But is that what you're saying?
No, I mean, first of all, I do agree that the kind of crowdfunding issue is something that brings on significant risk, that, you know, we need to make sure that it's properly structured so that people aren't tricked into investing into things that sound good over the internet. But I think in many other members of the roundtable will have opinions on this, but one of the problems has been the lack of exits that the venture capital community has been able to generate. There hasn't been an ability to get a company public. The IPO bill is addressing that and lifting the regulations that some of the smaller companies will face in going public. I think that's a positive. There has been, in the institutional market, many times it's a bit of flocking toward areas that seem hot. So whether it would be the small buyouts or hedge funds or whatever it might be, that's where people were running, and they've run away from venture capital, and it really has caused a dilemma within the market. You could speak to, I'm sure all of us realize how hard it is to raise just a pure venture capital.
Roger, and then T.
To add to what these gentlemen said, I think one of the things that's important to understand about the SBI's place in the capital structure between the commercial banking and equity is that they represent what I like to call patient money. They think more like equity, even though it's debt, and all companies will be challenged from time to time, and where your commercial banks don't have a lot of tolerance for those challenging times, these SBICs can really make a difference in helping the companies get through those and then back on the path to growth.
Mm-hmm. And in defensive banks, which I don't always defend, but in this case, you know, they tell me constantly that it's the regulators, you know, breathing down their necks, looking at the loans on their portfolio, and while they might personally like to be more patient, the regulators aren't allowing them to be. So I want to, you know, we hear that a great deal. T.
I think, you know, to address the question of kind of the capital and sort of venture capital and that, I think one of the things we've seen and what's important about the SBIC program is it's focused on small businesses. So the businesses we have to invest in are small businesses and small funds, and what we've seen in general in the capital markets is kind of increasing concentration of capital. And what that brings about is the investors are big fund of funds, big pension funds. They can't invest in small funds very easily because they have minimum amounts that they want to put into a fund.
Like, for instance, what are the usual minimums? They have to invest like $200 million or $100 million?
Well,
$50
or,
million?
you know, yeah, 50, you know, if they have to invest $50 million, they need to be investing that in a $500 million fund. And a $500 million fund, you know, has a number of principles. They're going to invest in 20 companies. They're going to have to invest $25 million in each company.
And that's more than RIP needs, or maybe not.
Exactly. And it's the small businesses that need, you know, $1, $2, $3, $5, $10 million maybe of capital that then suffer kind of at the end, because they're at the end of that waterfall, because the big institutions need to invest in big funds, which need to invest in big companies. And that's where the SBIC program does a great service, because the smaller funds can invest in those smaller companies and provide capital to those companies that need, you know, $2 or $5 million of capital.
And Jim, I'm going to get you and then Manuel, but are we limited, Harry, in the SBIC program for what a company can borrow?
We have a single fund can borrow up to $150 million in leverage, and
but
currently
a borrower to that fund, can they invest in?
An SBIC has an overline limit, so essentially 10% of its capital base can be invested in a single company.
Okay, so that'd be 15 million is your top line from 150. Is that
well?
correct?
If the fund size is 150 million leverage, say, and 75 million private capital, it'd be 225 million fund size. So they could invest 22.5 million in a single company.
Go ahead, Jim.
I just wanted to address the question that you started out with, which is why is there a lack of funding now? You address specifically venture capital, but I'd make it even more broadly private equity. I first got into the private equity business in the late 1980s and in Boston. And the 3 or 4 leading firms back then were doing deals where they were investing $5 million into $10 or $20 million sized companies. And those leading firms have all been very successful, and their funds now are 3, 5, 10 billion. And the smallest check they'll write is a few $100 million. Private equity as a whole has mushroomed dramatically. Our fund is less than $200 million in total commitments, including SBA's money. That now represents the bottom 5% of the entire private equity world. So a $200 million fund, which was a good-sized fund 20 years ago, that space has largely been vacated. And the industry has exploded, but your $10 million revenue company, like some of the ones that we've invested in that I've identified, if they're providing cooking oil equipment or they're a restaurant franchisor, that's not venture capital, and it's no longer where the bulk of private equity is. So what this program does is it supplements and it fills a void that was left by the migration of private equity firms into much, much larger deals.
That is the best explanation I've heard. Thank you very much. I now understand, I think I understand better our challenge. Manuel?
Living and breathing in the venture capital ecosystem on a daily basis, which is what we do, and I myself started in the venture industry back in 1987, the industry has changed dramatically. It was first brought on with dramatic change on, as now the infamous .com bubble blow-up that we all well know and understand in 2000, which was precipitated by a second blow-up that was not been written a lot about, is the June of 2000, which is the telecom blow-up that occurred. And then the market proceeded to go through an inordinate amount of changes, including, of course, the now infamous Enron and WorldCom changes on SOX and what have you. Despite some of the comments said earlier, the venture industry is nowhere near what it was in its historical levels by any stretch of the imagination, peaking out around $98 billion in 2000. Last year alone, the venture industry, according to Dow Jones Venture Source, our leading source of information, it did $33 billion of activities and investment last year to over 3,200 companies itself. I'm proud to say that we helped fill a lot of that void by providing $630 million of capital to venture stage companies that would otherwise not be able to gain access to capital from a bank that exists today. So we help these companies dramatically gain access to capital because the venture industry is in fact, or has shrunk itself, but these companies still have a capital need to continue to accelerate their growth. They're unable to bridge that gap in capital they need with commercial banks. We come in as an SBIC, take on that risk of financing those pre-revenue companies in order to get an additional capital they need to get their products and services out to the market and eventually lead to quite dramatic job creation out there. We help fill that, crossing that chasm as part of our capital in the form of venture debt, which is a critical component because our companies rarely have revenues and rarely have any kind of profits when we invest in them.
Jim, you want to say anything else? Or put your card down if y'all, okay. Does anybody want to add anything to this line of questioning? And then we're going to go to our next question would be here. And this is going completely off to another point, but for those of you that do specifically look at companies, how do you choose the companies to invest in? Where do you troll or patrol or look out to find the companies? Do they come to you? What mechanisms do those of you that are looking for smart investments, just go through that process a little bit with us. Go ahead.
Yeah, the main source, we call it deal flow, for lack of a better word. The main source of deal flow that we see is the local and regional investment banks. A lot of times, if you think about it, the customers might have small businesses, and the investment banking organization might be managing the income off the business. Because of estate planning needs and everything else, the owner of the small business at some point probably needs to sell or get liquidity for his estate taxes. They might go to the investment bank and say, do you have a solution? Is there someone we can talk to that might invest in our business, that might I know a buyer, but he or she can't get the financing. So a lot of times it's the regional investment banks, the local investment banks. The independent business brokers are a huge source of deals. The accounting firms who do the estate planning, the local accounting firms. The commercial banks will often call us because someone comes in for a loan. They don't fit, if you don't fit in that exact box, if you're 1 inch outside the box, they can't do anything. Sometimes they'll refer transactions to us, and a lot of times it's word of mouth.
Dan?
We look at transactions which are very young, companies which would have typically $200,000 to $1 million in revenue. These are companies that will not be talking with investment bankers, may not even have a CPA firm involved. I often go in and talk to the universities and talk about the value of a network. Networking is the way that these transactions get done. NASBEC itself does a great job. Now the SBIA does a great job at sponsoring networking events amongst ourselves. In the upstate New York region, as I mentioned, I'm the president of the Upstate Venture Capital Association. We hold networking events across the state, from Buffalo down to Newburgh, New York, just outside New York City, encouraging entrepreneurs to come forward with their ideas. At these events, we bring in funding providers to help make introductions. Just yesterday, I held an event in Buffalo where 2 companies stood up and made 10-minute presentations to prospective fundraisers. This is done every other month in Buffalo, New York, and it is all about the network, having entrepreneurs get out there and meet people. And often, it takes multiple visits in order to get financing done for these people. We will see a deal 2, 3, and 4 times, and ultimately, we will help them finance their business.
T.
Yeah, I guess I will pretty much echo what Vince said. There are a number of sources from which we get deals. A lot of it is networking based. A lot of it is advisors to the businesses, whether they are bankers or investment bankers or attorneys or accountants, who are advising the businesses. And some of it is, and a lot of it is networking. So a lot of the deals tend to be done kind of regionally.
Mm-hmm. Now, if it's in the SBA's interest, which is one of the missions of this small, and we're hoping to make it even more effective agency, would it be beneficial to have some funding at the agency level to encourage and host these and partnering with these networking opportunities? Or do you all have enough either time or resources to do that on your own? I understand there's a Small Business Investor Alliance. Who represents that here? Anybody? Small business? Do you all, and you can speak up, do you all do these networking? Is that what you all do?
We do networking largely with the funds themselves and with some feeders, the banks, and others, but not the entrepreneurs directly. Actually, we're working on some software that might be able to do more of that, where we can filter it to make sure that we're not overwhelming them with leads that just don't match the fit.
And would you identify yourself, Brent? Okay. Manuel, anything you want to add to this?
The answer is that the SBIC program is not well known by many entrepreneurs. It's fearful. It's a government agency. They don't know how to on-ramp it, how to approach it. A lot of our deal flow comes from crazy ideas of entrepreneurs who want to create new disruptive technologies or new solutions out there. A lot of them could be just professors, could be engineers that don't know how to go around starting a company or formulate a company. I think it would be incredibly useful if the SBA were to provide forums by which to help entrepreneurs learn how to create a company, learn how to get proper guidance on formulating a company and how to get a company off the ground. There's an incredible amount of American ingenuity out there that just needs a little bit of help getting itself structured a little bit and learning how to on-ramp onto speaking with financial sponsors out there. That in itself would help create more jobs and create more confidence in the marketplace. So the SBA staff would really be incredibly beneficial by helping these individuals learn how to gain access to these capital. And on the West Coast, there is a lack of SBIC capital out there to help, and also in many parts of the Northwest as well. We're seeing a huge demand of capital that just cannot find a place to get capital in the marketplace today. So that would be a huge helpful thing to have out there.
And do we actually have a map of where the SBICs are headquartered? Can we put that up somewhere? And Harry, will you speak to the issue of what the SBA is doing to get out the idea to entrepreneurs and to others. And let's just look at this map for a minute. This is the distribution by state. So I guess the darker have the more SBICs. So New York would be leading with, what is that, 46? You know, the sad thing is that there are lots of light-colored states, including my own, which is 1 to 5 SBICs. And again, you know, it's not so much the quantity, but the quality of the SBICs. What I'm going to ask the staff to do is do another map with the top, how many do we have in the country? 292. I'm going to ask you all to do the top, you know, 50 or the top 1/3, I guess, of that and see where they are operating to give us an idea where the more successful ones are operating and where the gaps are. But Harry, what are you all doing like about this to try to get this accessible physically in many other places? Now, we also have the internet, which is a powerful tool of communication, et cetera, so you don't always have to be, you know, physically located with the communications that we have today. But could you comment about that?
Yes. First, I'd just like to address real quickly a comment made about education of entrepreneurs. SBA does have a whole office dedicated at entrepreneurial development and through its SCORE and SBDC programs and other sort of programs.
But SCORE has not been expanded in how long?
Yeah.
What is it been authorized at what level for how long? Who knows that? But what is it? It's a $7 million investment that the federal government has made. $7 million. $7 million. That's it for the whole country. And that's the best known mentorship program. We have attempted to get it raised, and I've been blocked. Unfortunately, there's not enough minority support right now for the expansion of SCORE or something like it. But $7 million, they've been at that level for, I don't know, 30 years. But go ahead.
But we do recognize the need for that kind of education. With respect to the map, we have been focusing a lot of our efforts on a couple points. One is obviously trying to attract qualified management teams to the program with a particular focus on some of the underserved populations, minorities, and women, and we've had a fair amount of success with that recently, more than doubling the number of applications from those particular populations over the recent past. Also, we've been making large outreach efforts to limited partners, which are the source of capital for the program, independent of SBA, trying to attract banks and others such as TD and Wells to the program so that there's a source of capital for qualified managers so that we can expand in various areas throughout the country. We do what we can in a sense to try and make the program known as widely as we can by attending numerous conferences and events that are attended by people who have an interest in this space. And hopefully we can expand in a number of other areas that are underserved.
I'm going to get Dan you just a minute, but does anybody at this roundtable, knowing what you know about the success of this program, have any ideas for Harry about where he could look for experienced minority entrepreneurs, particularly African American, Hispanic, or Asian? Would business schools at Harvard, Stanford, or other well-known schools, young people coming out but with the prerequisite degrees, be interested in starting some kind of fund like this? Or do you need to have real-world experience for a couple of years, obviously, maybe, before you start them? Do any of you all have any ideas for the Small Business Administration about where we could get some more, diversity into this program? Go ahead, T.
Well, I don't know if that I have an answer to it, but this is very much a kind of mentorship industry where you learn by doing. I think it would be high risk to take even kind of bright, well-qualified students right out of business school who have never managed a fund and kind of focus on that. So I think the question is growing the base with experienced managers and
mentoring
and mentoring. It's really a mentoring kind of model, and always has been, because we're very small organizations. I mean, we have 5 full-time investment professionals, and I think that's probably bigger than a number of SBICs out there. And I think if there were 10 or a dozen, that would be a very large fund in terms of.
Tim?
We invest in a fund called Central Valley Fund. That fund is in Central Valley in California. Most of those fund managers do speak Spanish, and they have a majority of their companies that they invest in are all minority owned. So some of it has to do with location and expertise around the fund managers.
Mm-hmm. Emmanuel?
Clearly, with my last name and my name, I am a minority. I am a Hispanic, Latin background. I have to echo, it is an apprenticeship program, and I may say something here that people may find a little bit offensive. You have to lose money to learn how to make money. And you need to be in an institution that's going to go through that apprenticeship process for you to get developed as a asset manager, as a portfolio manager, and that takes time. That you just do not learn that out of the box. And I learned that, thank God, with my career at Bank of Boston, where I was cut my teeth, which happens to be originally the #2 licensed SBIC in the country. I had the privilege to work for it. But it is an apprenticeship model. It's very difficult to reach out to minorities. You have to give the minorities the opportunity to lose money, and that's a very hard thing to do, especially in an economy that's been contracting over the years. There are programs, there are outreach programs for minorities that you can actually tap, but that's something that should happen. But it's very, very hard to do.
Carl?
Sure. Just to kind of address what Harry had to say, I mean, so the program has attracted a number of women-owned as well as minority-owned applicants applying to the SBIC program. For example, Bob Johnson from BET Networks is sponsoring a group and bringing in a team from Carlyle Group. In addition to that, there's another fund, Pharos, out of Texas, and Neil and Youngblood, who's on the board of Starwood Hotels and Burger King and some other large organizations, a large hospital chain, is also bringing together a team of minority individuals to run his fund. And as it relates to the women-owned, there's been a lot of disruption in the marketplace where you had American Capital, which imploded, and a couple of other funds, and some of the women that were part of that group have also spun out and spawned their own fund. So I think the answer is that a lot of the folks who have the experience are now starting to mentor the junior folks to come in and start some of these funds. And I think we need to see more of that.
Good. And Don, thank you for joining us. And I know you had a weather delay, but why don't you just briefly introduce yourself, take a minute or so, and then you can take a minute to explain why the SBIC program is important to your business.
Okay, yeah, thank you very much. Yeah, I started my company in 2001, myself and one other gentleman. We're a Boston area company, and we took SBIC funding in early 2004, actually from the gentleman sitting to my left. And we found it was just a very good program, like one of the gentlemen said earlier. For a small business that had a few $1 million in revenue, private equity really wasn't an option. Venture capital, the traditional form, wasn't a great option because it was just too expensive. We would have to give up so much ownership. And so we went with the SBIC route, and it was a very good success. We had about 20 employees at the time of the investment in 2004. We sold the company in 2010. We had about 180 employees at that time. We'd grown our revenue from a couple of $1 million to about $55, $60 million.
And what is your company, Don?
It's called Innovec. It was called Innovec Systems, and we made scientific instrumentation, portable instrumentation, and we manufactured it in Massachusetts. And I think one of the things we're most proud of is 70% of our products were sold overseas. So we were manufacturing in Massachusetts, and we were selling to China.
That's great. That's terrific. I hope you're getting ready to start another company, huh?
Well, that's why I'm having lunch with this guy.
Good. So you and Dan will be having a special lunch today.
I got dibs on Don.
All right. Anybody else, Vincent?
Yeah, I mean, if you think about outside the SBIC world, how mentorship really happens, most individuals get trained, like the Bank of Boston example, through a larger organization. To the point that these made, you know, if the average SBIC fund only has 5 people, you know, what are the chances that you train someone and they're able to, whether they're minority or not, and go out and start their own firm? So this is kind of a segue into something I feel strongly about. We have this cap on the size of the program at $225 million of government financing, which is great, but because it's made available on a 2-to-1 basis, that means once you have more than $112.5 million in private capital, which is the cushion for the program, which is why the program doesn't lose money, it makes money, you're not optimizing your capital. You're starting to be less and less benefited by the government leverage. So there's an effective cap on the program of 112.5 of capital, after which the management teams stagnate, go someplace else. We've lost a lot of them through the years, and they've gone on to have great careers. Household name private equity firms started out in the program. So if we can increase the size of the program for the better managers, you're going to have larger organizations, more training, more people spinning off, starting their own firms. I've got 30 people now. I'm big enough where, you know, some of my guys will spin off and start their own firms, but it wasn't until I got to 25 or 30 where that was, you know, we really had more formal training and we could really do that. So I think, you know, we know who the better performing SBICs are. It's not going to cost any money. Let's create larger organizations rather than keep the thing capped. It doesn't really make a lot of sense.
Maybe we could have like a stage 1, stage 2, or stage 3, and you earn your way up through those stages or something like that. Manuel, you wanted to speak about that, and then I'll get to Rick. But Harry, I'm going to ask you for a response from SBA about maybe making some of these changes that might really significantly help and reward those that are the most successful and help keep this moving forward. Manuel, go ahead.
I absolutely echo the need to increase the funding levels, whether it's 350 with keeping the leverage going up to 300, which would be beneficial. But if you really want my opinion on helping the program expand and create the next bench of future managers, it would be nice to be able to see, to your point on staging out capital, that maybe some of our own individuals that we've been an apprentice within our organization start spinning out, and they're not viewed by the SBA, for example, as an affiliate and get wrapped up into the total licensing available capital. It would be nice to be able to see that a young manager spinning off from an SBIC
could be their own fund.
Could be their own fund. And yes, you're right. Maybe they start off with only $75 million of leverage, but that way you have at least training wheels, if you will, on a manager and getting out. But sometimes under the program, that related manager, if we're some of that equity capital helping them get started, could be viewed as an affiliate of ours, which means it detracts from our availability of capital. And I think that does a disservice to spawning new talent.
Doesn't make any sense whatsoever. Harry?
First, we do support an increase in the family funds limit to allow people like...
But what about the affiliate rule?
We have an awful lot of funds that are formed by partners that have left, or younger partners that have left an existing fund and started their own. They're only an affiliate if, in fact, Manny was also to be part of the new fund. So if it's actually a new fund with new managers, even though they spun out from an existing fund, they generally are not going to be constrained by the affiliation issue.
Okay, so they've got to be able to stand on their own to be a real fund. They can't be, you know, set up and then have to ask you, Manny, for advice every day, and then sort of, you know, it's got to be fish or fowl, in other words, if we could figure that out. But I understand the benefit, because getting back to the mentorship, that's exactly what you're hoping to do. Is some of the more successful SBIC funds are training some of the best people in the world to be able to help Rick and Don take their businesses to where they've taken their businesses, and you want to encourage them to start their own kind of, you know, funds and help the program grow more organically than just federal constraints. I mean, if there's some way we could design this program for the modern age, not the 1950s when it was created, but for the 2012, which we're in, with the whole world that's changed since then, and really give our entrepreneurs in America access to the capital they need to grow is I think what we're trying to focus on. Tim, let me get you, and then Rick, you've had your card up. Let me get Rick. You've had your card up the longest.
I just want to say that there is a lack of knowledge. A lot of people don't know the SBIC even exists. I was looking for solutions to my problems for 2 years before it was even brought up to me. When people need money, when entrepreneurs need money, and most of them are smaller companies, and I think it was a good question that you raised. I've heard a lot about the caps and, the upper limits, but I don't know if I really heard a good answer on what are the lower limits, because there are a lot of small companies out there that need money, and they don't know about the SBIC. And where do small companies go for money? They go to the bank, and the bank says, sorry, I can't help you. So, but nobody never guides them and then leads them to the SBIC. So I'm just a suggestion. Is there any kind of partnerships that should exist between the SBIC funds and the banks? Because you guys are limited with resources, it sounds like. You have a few employees. 12 employees is a lot. But the banks are everywhere. So maybe there's a partnership there that you could exploit.
And Rick, when you first approached a bank or at some point in the early part of your company, and we've been joined by Senator Moran, Rick runs one of the most successful landscaping companies in Florida and one of the largest in the country, correct? Family
Yes,
raised.
ma'am.
Couldn't get the money he needed from a bank. SBICs have helped their company. What was the smallest or the amount of money, if you don't mind sharing, that you were trying to get from a bank that you couldn't get? Or what, at some point, you had to go to the SBIC?
Well, in this transaction, this was a $3 million transaction, which, is not a small transaction. I'm not sure if that answers your question.
Yeah, but you couldn't get it from a bank, and you had to find it from the SBIC.
No, ma'am. And as a matter of fact, the bank, I had a bank. I was a performing loan. My company was growing. We missed our loan covenants. The bank, turned over to a workout officer. And, once you're on that list, you don't ever leave that list. So I was left with, the only choice I had was to go out and find a refinancing.
It's come to my attention, shockingly, I guess I should have known this, but my background isn't as a banker, but I was told recently that you could be a 40-year-old entrepreneur and have failed to pay 1 or 2 months on time of a student loan that you took out when you were 19 and basically be disqualified from a loan today. Is that your experience, or does anybody want to comment? Do you know if that's true, or Wells Fargo? What would your bank say? Go ahead. Do you know if that's kind
did
of what
I
the regulators
all of a sudden
are
start
telling
sweating? I mean, my legal counsel here. Generally, I would say that might be an extreme, but there certainly are restrictions that, credit is very important. We're a credit-driven culture. Something like that where you have 20 years, typically that falls after 7 years. It falls off your credit report anyway. But it is true, and somewhat to the point that bankers don't do a great job at knowing a whole lot about this program. I can say that in my discussions, we invest in a lot of SBICs, and even our bank doesn't know that this option exists for a lot of people. So I think that would make a big impact if more banks had the ability to say, here's a group of SBICs. It doesn't fit us. It would be a good opportunity to give them a call.
Jim, and then Tim.
Well, I think actually the way the SBIC program works, or at least a lot of us here, is with regard to the banks, it's really a case of 1 + 1 = 3. The bank doesn't want to come in and just deal with the entrepreneur that maybe doesn't have his financial statements in order, isn't willing necessarily or able to give a personal guarantee. But when my firm or Vince's firm or others like it come in and put a couple $1 million underneath the bank, then we actually get a multiplication of what's available to the small company. So we view banks as our senior partner, if you will, in helping to capitalize and make companies like Rick's successful. It's not either a bank or an SBIC, but it's working together. The SBIC provides the junior, more risky capital, but the act of doing that gets the bank comfortable and creates that much more availability for the company.
And creates, in the long run, if things work out, a great customer for the bank.
Mm-hmm.
that they can make a lot of money off of that particular business. That is exactly the business that I think banks are supposed to be in, correct? Don, did you want something?
My comment was that was exactly our experience, what Mr. Goodman says. When we took our SBIC funding, we got a bank line of credit on top of that that we could not have gotten had it not been for the SBIC line, for the exact reasons. The SBIC required a certain amount of financial due diligence and financial reporting and statements that weren't there before that.
And repeat for Senator Moran, if you don't mind, how successful your business was. You were making medical device. Go ahead, tell him.
It was a scientific instrumentation developed and manufactured in Massachusetts.
And selling to?
All over the world, mostly Asia. 70% of our sales were offshore. Half of those sales were Southeast Asia, mostly China.
Very exciting. Rick?
I just wanted to add, I echo exactly what he said. I would not have been able to obtain senior lending or to be bankable without the SBIC funds coming into play. But you know what, the bank's not the one who suggested it. The bank's not the one who found it. I had to pay a lot of money to an investment banker, a sophisticated investment banker who understood what the SBIC, even understood what it was, before they could even actually make an impact to get my company bankable. And for a $20 million company, you know, one of the largest in Florida at what we do in our industry, you know, there's no reason that a company like us shouldn't be bankable.
I don't know if anybody here is representing community banks in the audience. If not, Harry, what are you doing, or what is the SBA doing to inform? You know, we have about 7,000 banks, I think, roughly in the country, and we are really pressing, I'm pressing, and I think I'm joined by the members of this committee, for the SBA to be better partners, or the banks to be better partners with the SBA in all of our programs. We have 504, lending programs, et cetera, et cetera. What is the SBA doing today, now that you're a cabinet-level position, which we're very happy that the President has asked Karen Mills to be part of the cabinet? What are you doing with the community banks that are part of the SBA family to get them to better understand SBICs?
Well, with respect to the SBIC program, we work with the bank regulators such as Barry, and we've worked with FDIC and others to make a presence known at various events.
Like in what specific ways? Do you know? Is that what you or your office do?
For example, I was in Denver a couple months ago to appear at an FDIC conference, which was attended by mostly community banks interested in potentially investing in the SBIC program. And we've done other events like that as well.
Do we know how many new banks, like let's just say roughly last year, and if you don't, you could submit it, decided to take specific action to know about SBICs and ask for some sort of special briefing or something like that? I mean, how many sort of new banks come into the program? I don't know how to ask you the specific question, but I'm trying to get not just that you share information with, but that respond to you in some formal or official way they would like to be part of it. About how many community banks do?
I don't think we have a good answer for that. I would say the primary contact with the banking industry has been through the fund managers as opposed to SBA directly, and we sort of backstop them saying, listen, we're here and willing to assist you in any efforts you have to educate your potential investors. And as I said, we are willing to deal with them one-on-one or as a group. We have a number of SBICs that work with community banks very closely. For example, in Texas, there's an SBIC that's formed entirely around community banks. We have a number of SBICs in other states that have significant community bank participation in their fund, and we work with them and tell them we are more than willing to meet with them individually, talk to them over the phone, appear at events to educate them as to the program. But I can't give you a good answer as to how effective we are in that.
And Treasury, what are you all?
Yes, the Comptroller of the Currency actually has been out participating in some of these outreach events that Harry just mentioned. We held about 40 or 50 sessions last year with the Federal Reserve and the FDIC, where we bring community bankers in to locations like Harry mentioned, and Denver was one, and educate them about the SBIC, the 7A, the 504 program. The OCC has held teleseminars for our banks with SBA for about the last 4 or 5 years on some of these topics, 7A, 504, and then last month on the SBIC program that Carl actually participated on. I'll be happy to provide a copy of this for the record
Thank you, without objection.
of this presentation that we delivered. We had about 700 bankers on the line. Acting Controller of the Currency, Walsh, and I were at the Independent Community Bankers Conference last week in Nashville. There were 2,200 community bankers there. I did a presentation on the SBIC program, had good interest from the community bankers, all of whom were saying the same things that you're hearing around the committee table today, that they view the SBIC program as a way to bring in new customers and to help grow their banking business. And I think it's just a matter of getting the word out. We at the OCC will be putting out a how-to guide for banks to invest in SBICs later this spring. And, we continue to hold these seminars for banks, letting them know that they can get Community Reinvestment Act credit for investing in SBICs. So that hopefully is an incentive out there that banks see as being in their interest, as well as, of course, the fact that they really can make money on investing in these funds and grow their businesses through developing relationships with the small businesses that are financed.
Thank you. Carl, you wanted to say something?
Right. So I think Barry covered a lot of what I was going to say. I was going to mention that we did participate in a webinar for any of the banks, national banks or super regional banks, community banks that wanted to learn more about the SBIC program. And I was going to mention that Barry is working on a white paper, and I'm working with him on the white paper that will be distributed to the banking community.
Well, one of the big picture, and I'll get to you, Vincent, in a minute. We're going to try to wrap up in about 10 minutes. I understand that it's in the private sector's interest to make money as fast as they can, as much as they can, and that's what a lot of people are motivated by. I have no problem with it. But I've learned as the chair of this committee that there is great value and actually great strength in small businesses that are just businesses that feed one family. But that's a major contribution to make. And although there are lots of people running around the Capitol that want to promote the gazelles and the big businesses that they can spin off and everybody makes a lot of money and maybe they sell the company internationally, and I'm all for that. In America, we have to honor the tradition of small businesses that only want 2 restaurants, but they feed 15 families for 30 years. There's nothing wrong with that. And I just think that our country has, because of the concentration of capital, the rush to make as much money as you can and, die with all the toys, kind of attitude, that we've gotten away from just the basics of trying to get money out to people who want to be their own boss, who have something to contribute, who don't want to travel all over the world. They just want to live in their neighborhood, raise their kids, go to church, have a happy life. Is there anything wrong with this? So this is why I so believe in community banks and getting money to Main Street so that this can be America. And there seems to be just a cutting off of that kind of opportunity. And the only way you get it is to, like I said, Senator, you either have to put up your house at risk, your children's college fund at risk, all the money that you own at risk to get money to start a business that all you want to do is feed your family and a couple of your neighbors. This is a big problem right now. And I am determined to find a way through this maze of all this fancy financing to figure out a way to get back to that, because our main streets are thirsty and dying because we can't get the money they need. So I think SBICs are one way. If we can, help you all to be even better at what you do, it may not be the only way to do that. But with all due respect to these big funds and these big, $1 billion, $5 billion, $10 billion IPOs and Facebook and Google and everything, they're just a lot of people I represent. They just want to run a restaurant. And I met a little young lady the other day. She just runs 5 ice cream stores. And you know what? She's real happy. And she said, Senator, that's all I ever wanted to do. run my own business. I've got 5 stores. I'll be happy if I can do that for the rest of my life. There's nothing wrong with that. All right, does anybody else want to say anything? Go ahead, Vincent.
I have kind of a simple suggestion. I think Harry does a fantastic job.
Oh, you got to turn your microphone on, please.
I think Harry does a fantastic job with the resources he has. But if you go to SBA.gov, try to find the SBIC program. It's really hard.
I will go.
So
if
you
I
think
can't
about
find
it,
Harry, you're going to hear from me.
Well, it's really hard to find.
If you do find it, would you tell me?
And
where it is.
When you think about the lenders out there, the younger people, they use the internet a lot more than we
Right.
do. That's the first thing they do. They can find SBA.gov, but from there, so we really need to spend a little bit of money having a modern website. That's the first thing a lot of our companies do is update their website to attract more customers. I think we can do the same thing.
All right, that's going to be one of our first recommendations to the SBA and then to Treasury. Senator, did you want to add anything? Or we're very happy that you joined us, and why don't you say?
No, Chairman, I just would thank you. I think these roundtable discussions are often of greater value than the
Yes,
hearings we hold much more frequently. And I apologize for the schedule being such that I only have been here for the last 15, 20 minutes, but I wanted to get a flavor for what was being said, and we certainly want to make certain that we do the things that allow capital to be available so people can pursue the American dream. And everybody has a different American dream, and we want each to be able to pursue their own. So delighted to hear at least what I was able to hear this morning, and look forward to working with you on this and other issues.
Thank you. And I think, Vincent, while the Senator's here, just again, one of the great points about the program is of no cost to the taxpayer and limited risk. If you just go over that again.
Sure. So
And you're the SBIC of this year, right? The
last year, I don't think
was
announced this year yet. It's during Small Business Week.
He was the best one last year in the country.
So the way the program works is, if you take the top end of the program, if you have more than one license, which several of us do, you can get $225 million of long-term government guaranteed financing at essentially the government's cost of capital, but it's on a 2-to-1 basis to your private capital. So for me to get 225 guaranteed from Harry, I have to go raise 112.5. That's the way due diligence is performed to protect you, because people aren't going to give me 112.5 if they don't think I know what I'm doing. And their 112.5 is on the hook first if we have defaults with respect to how we deploy that 337.5. And what else did you want me to cover? And so, in effect, what we do with the money is we start where the banks stop, and we stop where private equity and traditional venture capital begin. So we're in that much-needed void in between.
And Jim? And then we're going to wrap up with what you all, go ahead.
Well, just specifically to the point of what, if any, is the risk to the taxpayer, we've raised and managed 5 SBIC funds. The first 3, which are now fully mature and have been sold off, generated more than $40 million of profit to SBA under the participating securities program. But every one of our funds has paid back more than we have borrowed. So we're a net generator of cash and profit to the program. Obviously, we hope that continues, but I think it's important to understand that if the program is well managed, as it has been, and it uses its discretion in licensing new applicants, it can continue to exist at no cost to the taxpayer. I think that's a really important point here, is that a well-run program, as Harry and his team have been able to do, can generate some valuable capital, create jobs, and do so at no cost to the taxpayer. And we've been just one example of that.
Dan, and then Manuel, and then we'll end with Treasury.
I'll tell you real simply why you're zero cost to the taxpayer. Rand Capital borrowed $10 million, just $10 million from the SBA through the SBIC program. We paid interest on that at 6%, now above market interest. We've paid you back $9.1 million. So for roughly $900,000 net risk to you at this time, we've created 500 jobs, created $200 million in growth and revenue, and in 2011 alone, the employees of our portfolio companies paid $7 million in federal withholding taxes. We've created jobs, created wealth at zero cost to the taxpayer. That's a success of the SBIC. That's why it's important.
Manuel, and then we'll end with Treasury.
Madam Chair, I want to go back to a point you raised earlier. How do we get Middle America, Main Street America, capital that it needs to have that young professional run her 5 ice cream stores? Free thinking as this forum you want it to be. A suggestion that I would tender to you would be the following. I think that historically the SBA had a program that had about $25 million that was allocated to distressed economic regions. If you want to really induce that invested in America, you need to empower the equity to be that first loss capital that Vince referred to earlier. What I would suggest, Madam, to consider is that you want to encourage that equity capital to come in and start the small SBICs. Call it $25 million SBIC, but they receive 3 or 4 times leverage on that capital in order to allow that small entrepreneur to get a $100,000 loan or $500,000 loan by having that equity capital be able to be leverageable higher, but keep the fund at a smaller size from the SBA. You actually may see smaller amounts of capital, instead of the $1 billion you're referring to, go into that Main Street America through an economic development program that way, which I think if historically the SBA had a similar program on economic distress areas, that I don't think it's been well capitalized or well used, because there is no equity capital that wants to go into that small distressed economic region. So you need to create an inducement to have that capital flow in there, and I think that you'll see Main Street America start getting that small amount of capital it's looking for.
Mm-hmm. And particularly if you could partner with some of our more entrepreneurial mayors in this country that are trying to build their main streets, even in rural America, as well as in some of the more urban settings, that have had effective economic development programs. That could be an interesting partnership as well. Okay, Dan, last word, and then.
RAND is willing to go out to those rural and distressed areas. We went to Mexico, Missouri, and are building bricks, started up a defunct brick plant there. We're down in Waycross, Georgia, making boats. We're going to these severely distressed areas, making very small investments in companies, and that's the importance of small funds to the program.
Okay, Barry?
A couple points. Yeah, we've been out talking to community bankers about the SBIC program. Couple points of feedback which I have shared recently with the SBA, but I'll share with you as well. I think that there is an interest in using the internet, maybe the SBIC's website, to find funds that are currently soliciting investors, and I would just encourage encourage the SBA to see if there's a way that they could make more prominent on their website funds that are soliciting capital now, and then we can send banks that are looking to participate to their website. The other point that I've made to the SBA is that they might consider posting fund performance so that banks can see which family of funds have been the most successful. And I think, having the data and the information available to the banks on fund performance in terms of where they want to place their capital might be helpful, and we've gotten that feedback from banks. And just last point, in terms of your question about the smaller business, the mom and pop business that you were referring to a moment ago, the State Small Business Credit Initiative is just getting up and going. The OCC has been out meeting with the state agencies that are running those programs, encouraging banks to participate. Many of them run loss share so that banks can take greater risk in those programs and make the kinds of loans that we've been hearing about that banks have been shying away from. And then also, many of the very small loans, the microenterprise loans, are made by community development financial institutions. CDFIs are certified by the Treasury Department, receive money through the CDFI fund, and a lot of banks are partnering with those CDFIs to provide them subordinated capital debt so that they can go out and leverage the grants that they get from SBA and the Ag Department and the Treasury, which is then used to make the really small business loans to those entrepreneurs in the low-income communities. So we are out there trying to get banks more involved, but I agree it's a huge challenge.
Okay. I'm going to try to wrap up, but I don't want to cut anyone off. Harry, do you want to say anything?
Just a couple comments. One is as to the information that Barry's referring to. We are looking into the possibility of making that information more available in a way that respects the confidentiality of the providers of the information. Second point is we don't want to get entirely away from our roots in a sense. We do have a requirement, Congress has seen fit to impose a requirement that 25% of all investments by SBICs be in smaller enterprises as opposed to just small business. So we try to make sure that the lower end of the economic scale is being addressed as well.
And what do we define as smaller enterprise?
It's essentially 1/3 the size of a small business. So instead of $6 million in after-tax net income and $18 million of net worth, it's $2 million in average after-tax income for the prior 2 years and $6 million in net worth.
Carl, anything else?
I do. I just want to expand on something that Barry had said too. I mean, so to the extent that some of the funds are out there looking for community banks that are fundraising, that would be a great tool for me because we are a very active investor and I get a lot of phone calls and we're only investing within our footprint, which is from Maine to Florida. So at least I'd love to be able to have a website that I can refer them to that, if they're interested in investing in the SBICs, that they can go to that website. One other point that I'd like to make that I hadn't heard mentioned at all, too, is not only about the job creation, but with job creation comes tax revenues.
Yes.
Revenue taxes, payroll taxes, and with the direct cutback in federal allocations, I mean, this is a great way for states to get additional revenue.
Well, thank you all so much. This has been very, very, very interesting, very helpful. I think we got a tremendous amount of good information, on the record. The record of this hearing will stay open for 2 weeks, so anything else you want to submit in writing, if there are other individuals that want to submit a statement through you, we'd like it, for you to sign for it when it comes to the record. But if there's a colleague of yours or another person that has strong interest, maybe a professor from a think tank or university that has written about this you'd like to submit, but under your, name, please do. And I really thank you all for coming. And we're going to hopefully put a major bill together and try to get it down to the Congress sometime in the next month or two. All right? Thank you so much. Meeting adjourned.